Hey guys, it's again Mr. Miles. Welcome back again to this video, and in this video I'm going to be showing you how you can use pure price action to identify the market structure of any type of any chart that you're in. Okay, so as you can look at my charts here, if you can see them clearly, I'm trying to figure out and show you the BMS, SMS, and the RTO plus the stop hands. Okay, so if you've been watching my videos, the BMS means break market structure, and the RTO means retest to the order block. And if you still don't understand the order block, and check on my old videos so that you can be able to understand what we are doing and what we are talking about. Then the SMS is the shift market structure, which therefore means that an order flow, a consistent right order flow. That is the meaning. So in this video, just keep on watching the video, and after the video you'll be able to understand all the things and be able not to use the indicators in identifying the structure of the market, because I guess you guys, using pure price action is the best way of trading. So let's watch. Just check on my, just keep watching the video so you can be able to learn.
Yeah, so today I'm going to be speaking about what we call structure of the market. Okay, the first thing that I'll first begin with is that most guys have confused trading to cramming. You know, trading is something very, I cannot tell you that you're going to start cramming. Okay, just like your mentor has told you, or like you watched a video and told you that when you see an M structure you start selling. No bro, when you see a W beneath the market you start buying. No bro, you have to understand the structure of the market, understand why the dealer is making that structure of the market. You know, the most important thing that I will tell you about is in ICT is the best way of trading and beating. In ICT, we have something we call it BMS and SMS. All of them determine the structure of the market clearly. You guys can get me? BMS is an abbreviation for it. BMS means break market structure. I'm going to give you an example of BMS, and if you're not in my Telegram group, I'm going to send enough examples, enough photos of BMS examples and also SMS examples of any trade that I will maybe sample. Then I can send it, and I will do that today. So make sure you're also in my Telegram group so you don't miss any of this. And if you also try to draw yours, you can draw and just send me. My WhatsApp number will just be beneath my video of YouTube, this video. Okay, so what is a BMS? BMS means break market structure. Okay, let's say like this. As you can see, this is this point here. This is our M structure. This is our M structure. Okay, a W structure. We call it W structure. But the most important thing is that the most important thing is what we call BMS. BMS means break market structure. You either have BMS or SMS. BMS mainly, it means the trend of the market has been broken. Okay, SMS means shift market structure. SMS really means a continuous trend. So we are going to start with the BMS. Okay, let me draw this. Sorry, let me first draw this line, guys. I want you to see here very well. Okay, that is cool. Okay, that is very cool. So I hope you've seen this point. So when you see this, you can see this line. It is 1.3732. Okay, 1.3732. I want you to understand what happened here. At first, this was a bearish trend. Okay, bearish trend. Okay, cool. Because we have our low here and we have our low here. So what do we expect the market to do? We expect another lower low. We don't expect price to come and break this point here. Okay, this retest. We don't expect price to do that. We expect price to make another lower low. So when price breaks the structure of the market, when it breaks, we call it has broken the market structure. Okay, we call it has broken the market structure. And when the market structure is broken, we are going to have a new term. We shall call it RTO. RTO means retest to the order block. Okay, yeah, that always happens in the market. So in trading, we shall only be having two things. We shall have what we call break market structure or shift market structure. Shift market structure means a continuous trend. Okay, a continuous trend just like this. This is a lower low. Okay, this is a lower low. Price retests back. This is also a lower low. If you haven't watched my video about order blocks and marking your lower lows, you can just go and check the video about order blocks so you can understand it more, because you cannot understand this video without understanding the first video that I posted. Yeah, so this our lower, this is like a bearish trend. It's a bearish trend, not this, like this is a bearish trend. Okay, so when the trend is broken, like take for example this point here, okay, the trend was broken at this point. So this point we call it BMS, meaning break market structure. Let me draw this thing for you guys. I want you to understand this. Let's say this is our W. Our market is making this shape. I want you to understand there are so many shapes. We have a W, but this W has got different shapes, and you have to understand why the dealer makes this type of shapes. In the next video I'll be posting them. You have to stay tuned so you don't miss it. Cool. We have this. Then we have also this. We have, let's say this AW. Like that. Then like that. Okay. Like that, to that point, a retest, then back down. Okay, so I want you to understand all this. When you look at this point here, okay, we call this point here, we call this point where I will put this, or we call it a BMS. It means the structure of the market has been broken, because let's say currently it was a bearish trend. Okay, so when it breaks this point, it means the structure of the market has been broken. So what do we expect after that? Where you're going to enter your trade, we expect price to retest. That's what I said, RTO. It retests to the order block, and the order block must be there. Retesting to the order block. After testing to the order block, then price has to shoot up. Okay, a new trend moving up. Then let me give you another example. This one means a BMS. Why? Because it is shifting the market structure, a continuous trend. You can see this, a retest to this point, a retest to this point. Okay, then price comes back down. Okay, so we're gonna expect a retest to shift the market structure, shifting the market structure, just a pullback. Then it shifts the market structure to the next lower low, beneath this lower low. Okay, that is cool. And then if the market breaks the structure, then what should we expect? We expect price to close below this point. Okay, price to close above this point. When price has closed above this point, then the structure of the market has been broken. So we expect a retest to this point, that is the RTO. Okay, retest to that point, RTO, retest to the order block. So when a BMS has been formed, you're going to look for your lower low, then mark your last order block, then expect a retest to that order block, which we call it RTO. That is in ICT and BMS SMS. You can study about it. Then a new trend starts. Let me give you an example direct to the charts. An example. I told you this is a point, our BMS is here, structure of the market was broken. Okay, this is our lower low. Okay, this is our lower low. Okay, so we are gonna look for they're going to look for the last bullish candle to be formed in the market. Then we draw our order block. Okay, so if you haven't watched my video about drawing order blocks, you can go and check it so you don't miss it, so you can understand it very well. Look at that. This is what we call a retest to the order block. Okay, a retest to the order block. We call it RTO. So the structure of the market is changing. That's why you can see price is moving up. Okay, a new trend. So this is actually very important. Understanding BMS and SMS is very important, because at the end of the day you have to be flexible and you have to understand whether it's a continuous trend or it's not a continuous trend at the end of the day. And another most important thing that I'm going to tell you, but you have to check my next video, so I'm going to put more light on it, about the shape of every structure in the market. Let's first learn about BMS and SMS. I will send my examples on my Telegram channel, so don't miss and wait my examples. Check the photos I will send. If you're not yet in my Telegram group, I'll post the link just beneath the YouTube video. Then you can just sign in from there. So okay, I was trying to say that the structures of the market, you have to understand them. You don't have to just cram them. Take for example, in trading, we have got, let's say, this an M structure. Next time I'll be telling you why the dealer does that. We have this type of M structure. We have this type where the first one is longer than the second one. Okay, then we have this type of M structure here. The first one is shorter than the last one. The last one is longer, makes a long one like that, kind of a stop hunt. It's mainly used for stop hunts to hit people's stop loss. Then price moves to the rec point. You get that? That's the type of M structure. We only have this type of M structure. At the end of the day, you have to understand why the dealer has made this type of structure and why he has made this type of structure, because all of them mean differently, and all of them are targeting either buyers or sellers depending on the equity the dealer is seeing in the markets. You get that? So why does the dealer make this type of M structure? And most of these type of structures are mainly common in M15, that is in New York session or London session, depending on the time when the market is very crazy. Okay, they always form this to either hits people's stop losses, fake moves. Then you will see traders who trade using break. You know that traders who trade using breakouts, and what will the market do? He will make a fake breakout because the dealer is watching you trade. He'll make a fake breakout, and for you think, yeah, it's time to enter because it has broken the trend. Okay, so you enter the trend, and after entering the trade, he pulls it back from, because that was just a fake breakout. That's why you have to understand each type of these structures. Even W, we have this type of structures, and in the next video I'll be talking in detail of this type of structures, why the dealer makes this, and whom is it targeting, and how you should play away from this. That the most thing I want to speak about today is, in trading, you have to do one thing. There is a key thing that is very important. Okay, patience is important, yes, but you have to master your entry. Okay, you have to sharpen your entry. Okay, you have to sharpen your entry, because trading BTM and RCT, you're not going to lie me that your stop loss is going to be 40 pips. No, I cannot believe that. The most important thing is that you have to make your entry very sharp. Take for example, you're going to enter a trade. Let's say this. Okay, last time I taught you about order blocks. Let's say this is our lower low here. Look for the last bullish candle. Draw it. That's the last bullish candle. Okay, what did price do? Price retested to the order block. Okay, and then after retesting to the order block, it came back down to make the second lower low. Okay, this is the second lower low. Okay, so what are you going to do? When you spot price has retested to your order block, just check how many pips. Your stop loss can be even 10 pips, but you just make it like 15 to cater for stop hunts in the market, because you never know what can happen. Because in BTM and RCT, we always enter the trade using M5 or M15 so that you can sharpen your entry loss, and you can reduce your stop loss and make sure your stop loss is like your take profit can be like 3 times more than your stop loss, sometimes even 4 times. Sometimes even 5 times, even 10 times if you spot the level very early. Then another thing that I want to tell you today, guys, is market moves in levels. Market moves in levels. Why am I saying market moves in levels? Because it is a rule. You have to understand the weekly cycle in the markets. Okay, 3 levels. Let's say 3 levels drop. Okay, and 3 levels rise. So you have to understand before trading, before starting a new week. The first thing is that you have to understand the level in which the market is, and the best time frame that you're going to use for understanding levels is H1 time frame. You have to understand levels in H1 time frame so you can trade, because market repeats. It's a circle that repeats itself. So the most important thing is that you to understand which level the market is. Okay, if you understand the level in which the market is, then it's a cool deal. You're going to just trade in between that, because you're not going to trade out of that point. Yeah, so guys, next time I'll be making a video so you can understand about the shapes, this type of M structures, this type of W structures, why the dealer does that. And if you haven't watched yet my videos, you can still watch them. And next time I'm going to also be putting more light on breaker and source. People told me about that. I'll do it next in the next video. That is this week on Saturday or Sunday. So for now, you guys, you can have a nice time. If you have any question, you can just inbox me. You can inbox me on my Telegram, or you can inbox me on my WhatsApp number, or you can also inbox me on my email. Yeah. So you can have a nice time. Bye.
Hey guys, again, it's Miles. Don't forget to subscribe and hit the notification bell so you don't miss any of my videos again. For any alerts of my new videos that I make, because they're so educational and they will help you in your trading career. Okay, this video, don't forget, this video is being sponsored by XNES. Okay, XNES is one of the biggest and the best, easily reliable, trusted broker in the world. Okay, so what you can do is XNES is a broker that is very nice. I've been trading XNES for 4 years and it's a very trusted broker, very reliable, and he has got the easiest spreads you can use, and he has got the best and easy way you can deposit and withdraw your money, just like the mobile way of depositing and withdrawing money, which is very rare on any other broker. Again, the best way about XNES is, XNES is very powerful in such a way that they don't restrict you on your leverage. Just imagine it has got unlimited leverage, which is very rare on other brokers. So in XNES also, you can deposit as less money as possible and start trading. So what you can do is just check on the link below my description or on the pinned comment. Click on it and open yourself a new account of XNES and find yourself and start trading. Okay guys.